The country's large railways are showing the effects of the COVID-19 pandemic and the lockdown. Double-digit decline in revenue in most of the categories for CN Rail. But what does the railway have to tell its investors about the future? President and CEO JJ Ruest is with us now. JJ, thank you very much for being with us. And let's just start there with that top-line declines that you saw and where you think we are with obviously there were going to be declines. How did they meet your expectations, and what are you telling investors about what lies ahead?
So there were going to be decline. The decline was 18% revenue ton mile, which is a measure we use for volume. The bottom was the month of May. Especially in May, most of the automotive manufacturing sector in North America was shut down. And then in June, we started to see a bit of a recovery on the sequential week-to-week volume-wise, and we see the same thing in the month of July. So where we're at right now is the beginning of the recovery. That's early stage in June and some in July. And then obviously we're getting prepared. But we're getting prepared for different scenario. Either we may have a second pandemic, and we're prepared for that. We may have a slow recovery. We're prepared for that on working on our costs. But if the recovery is quite fast, we're prepared on that also. Because as you know, being our biggest railroad in Canada, we play an essential role to the economy. And we need to be able to play that role no matter what the scenario is in the coming months, coming quarter.
When you talk about being prepared for a second wave, what does that look like? How do you prepare for that?
So prepared meaning that there might be a slowdown in the business again if the consumer is no longer able to live the life he's really living here right now in July. So we would look at our costs again, whether or not we would have to do park equipment and do some furlough. And also on the safety and health side, we've had an extensive program to make sure our employees continue to come to work safely. As you know, we never stopped working. 20,000 of my employees kept working day in, day out. We provide them safe conditions. I'm speaking to you from the headquarters of CN on the 17th floor. This building's never stopped functioning also at least a partial level. So we would be able to do what we had to do in March, but we'd have to do it again. And we need to be prepared in case, knowing that it is quite possible, we have to do that this fall again. On the flip side, if the economy starts to pick up, in the last couple of weeks, we can't quite conclude. If the economy starts to pick up, we need to be prepared to call people back faster, to probably start hiring this fall for the next winter, et cetera, et cetera. So we need to be prepared on both sides of the scenario so that we play our role as an essential of the Canadian economy.
And that second scenario, as you note, it's only, a couple of weeks of recent data that we're looking at, but it is, JJ, surprisingly strong. I mean, we saw V-shaped retail sales rebound. We think June GDP will be very strong. As a CEO, at what point can you count on, I guess, or anticipate that growth may be real, given that there's the uncertainty factor of what reopening does to the COVID data and how it might all, of course, back up on us?
So we have the benefit of being on the front line. So we don't rely on economists' forecasts to tell us where the economy is going. We rely on our own daily carload. We move the product. So we actually, in many ways, have a better pulse of some of these sectors. So definitely the manufacturing sector in automotive has restarted. We started in June. We see that the lumber industry is also having better days, partly housing start, partly lots of renovation. I saw this morning that some of my very large steel accounts in the U.S. are raising price. When you raise price, because the demand is starting to be better than what it was. And we had we're very bullish on the Canadian grain, for example. We've announced at the same time as our result that we are investing another $150 million to increase the size of our railcar fleet to be even a stronger partner to the Canadian farmers who export overseas. And the Canadian export on grain have been fantastic this year. And then we're going to give the order this week. Depending where we manufacture these cars, we might also be able to help the Ontario economy who produce rail cars and produce steel. So I'm cautiously optimistic, and we watch the stat very closely. And I had a meeting this morning with all of my team, all my exec, and I actually prepared them for both scenarios. We may have to deal with a second pandemic. It is what it is. At the same time, we better be prepared for a stronger recovery whenever it comes, sector by sector, geographic by geographic pocket. The U.S. also, of course, because we're three-coast railroad. And we would really want to be able to be in that case scenario where I can recall more of my layoff employee right now who would prefer to be on the railroad working than be on unemployment insurance.
For sure. You have started to recall some of those workers. What's the kind of method of bringing workers back, and how quickly can you do it? What's the kind of elasticity of your labor force?
So depending on the labor agreement, we have many labor agreements, some in Canada, some in the U.S. The recall for the employees, we formally recall them. And in some cases, like in the U.S., they have up to 30 days to come back. And on the Canadian side, it's anywhere between 7 and 15 days. So people get recalled. Obviously, they're qualified. They may need some refreshment in their training, depending how many weeks they've been out of work. And then they book back in, and then they basically back on track. So this is not something. This is something the rail industry goes on through every economic cycle. So recalling people is an easy enough task. But you need to have some foresight of what the demand will be in 8 weeks from now, because you need to go through the process of which pocket of the area do we need to recall people. Typically, the early green shoot at CN are typically in British Columbia, for example.
You took a non-cash charge in the quarter related to the sale of some rail lines or potential sale. Tell me about what you're doing on kind of rationalizing lines that aren't in use or aren't in the use you want them to be.
So we have a long-term plan to keep working on our costs and operating ratio to do some permanent change, positive change to our costs. And as part of that, we have put out for sale some of our branch line in Wisconsin and some as well as in Northwest Ontario. And the difference, the non-cash adjustment is basically the difference between the market value and the value in our book. So this is all in the mindset of putting these assets in the hand of those who would have lower labor costs than us, because their labor might be willing to do multitask, and also in the hand of a short line operator who typically would have access to capital subsidies or support from the province or from states or from U.S. federal government. But it is in the mindset of trimming the part of our network which doesn't belong with us long term, and doing it right now as opposed to doing it later.
All right, JJ, it's great to have you with us. We appreciate your time as always. JJ Ruest is President and CEO of CN Rail.